All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, June 4th. So we got one more day of the trading week for tomorrow, but some interesting action again. It seems like every day this is the best show in town in terms of trading, and there is some excitement every day. There's something new going on. Yesterday was this crazy move in Boeing that we saw, and and some other stocks. And today it was the airlines again, which caught everybody's attention, and some other groups kind of caught again too. So it seems like I hate to use the word because uh, I don't know, so many people are saying it, but we are seeing, a little bit more of rotation out of some groups that have done pretty well. I want to go over a couple charts with you guys. I'll go over the S&P chart. I'll go over the Qs chart. But some of these places are pretty overcrowded, right? We talked about the Qs, Nasdaq making a new intraday all-time high yesterday. I believe that's what it was. And so it's only natural to see a little bit of profit taking, especially as they talk about, more and more. We are starting to get some dates now, like in New York City, for when, the phases of reopening are going to happen. And as that happens, some of the stay-at-home stocks they're going to get sold off a little bit. And you could see now there's two things besides that move today. The other thing is the move in interest rates that are going on, and we talked a little bit about that after hours yesterday. And then finally, I'll talk a little bit about earnings because I've been getting a lot of questions about earnings, but I don't know. We'll start with interest rates. This is interesting because bonds, people kind of forget a little bit, but you could see this TLT is breaking down. Uh, and what that means when TLT goes down, remember that bonds are has an inverse relationship. So when prices go down, that means rates are going higher. And when I talk about rates, it's the long end of the curve, right? We're not talking about short-term interest rates. That's a concept I always get questions about. Well, how can the rates go higher if the Fed is controlling them? The Fed controls the short-term rates. The long-term rates, and we're looking at TLT, which is 20-year treasuries, so longer-term treasuries, they are not really being controlled, right? They are floating based on what the market. Now, the Fed is doing some things. They've been buying some treasuries, and they've been tapering those purchases off month by month. But more or less, the longer end of the curve floats by market forces. The short end is what the Fed is controlling. But you could see this is going down. So when interest rates go up, it does affect some groups. So if you look at what happened today in the home builders, right, the rates have been very low for mortgages, which is a good thing for home buyers. If rates go higher, that does mean the mortgage rate will go higher, and maybe that had something to do with the home builders selling off 2%. Also, utilities. There's a dynamic there. Utilities were down. Now they finished off the lows. They were down about 2.7% today, and they've had a nice run over the last week. But what happens is when the interest rates go higher, treasuries by default are safer than equities. So people tend to, when they see the interest rates go up in treasuries, they decide to sell some of their names that are higher yielding areas like utilities and like high dividend names and so forth. They sell a little bit of those and they buy some treasuries, right? That's a relationship that's gone on forever. So I just thought that was a little bit interesting too. You have, besides the big move of the day, which was American Airlines, which I think is just a recipient of people I think are probably going to want to travel more. You could kind of see as the country reopens, everybody wants to get out and everybody wants to do something. So that seems like the feel to me, and not everybody, but there's a lot of people that that want to go out and do something. So I think that is kind of what's going on with the airlines. I talked about them a lot in yesterday's video, so I'm not going to rehash the whole thing, even though this was a tremendous move by American Airlines, up 40%. I mean, that is a remarkable move. And a squeeze. That's known as a short squeeze. And if you're not familiar with that term, but you could look at AAL, and we'll bring up on Bloomberg here with the percentage short interest of the float is 35%. So when a name gets running like this, it does cause the shorts to panic a little bit and have to cover or buy back some of their short position. And we just saw a crazy amount of American Airlines calls. It was very similar to what was happening with Boeing yesterday. They just kept coming. And as soon as there was a dip, too, if there was any dip at all, they were just going nuts. And again, most of it is all short-term stuff, but you could see all of the biggest contracts traded were all weeklies. So they're just really like they're day trading, right? Most of this stuff, just to kind of give you an idea of that. All right, so that's that. And then, of course, besides that, it was, names like CC. I traded this one, and this one didn't go up nearly as much. It didn't catch that same type of short covering. But, we saw a lot of call buying in names like this, NCLH, right? These things, it is what it is. This is not my favorite type of play because I really don't like stocks in downtrends. I believe stocks are in downtrends for reasons. I am a trend trader, and trend traders try to stay away from names that are in downtrends. But like I said yesterday with Boeing, as long as you have some reference point that you can trade against, for a short-term trade, fine. You could do that. Speaking of Boeing, had a quieter day today, but still up 6%. Big gap up. It didn't move too much after the gap up this morning, but we did talk about that. And again, look at the volume on here as well. So that was kind of the story of the day, and you kind of have to ask yourself a little bit. I mentioned I would talk about the S&P, which again even though this was down a touch today, it's still there's no sell signal in the S&P. So you can make up whatever type of whatever story that you want to tell, basically. But there's basically about how overbought we are and all that stuff. But we still have no sell signal in the S&P. We are still moving above the 5-day moving average. So again, you can make up thing. You could talk about how the put call ratio is definitely way hot. Yesterday it was a 0.4, which is way complacent. So again, how I use that kind of thing when we see the put call ratio go to a 0.4, and I think it was like around a 0.6 today too, which is still very hot, is that the market is really complacent right now. So complacency tells me that you want to doing all things like we've talked about the last couple of weeks, making sure that you're taking money off the table, taking some money out of your trading account when the market is this complacent. Right? So what I would be looking for at this point, I'm still in some trades and I'm still kind of picking around, some of the underperformers today. I'll talk about Shack in a minute, which is a trade that we looked at the end of the day yesterday. But so there's still, things to do like that. But I'm really like trying to basically say, don't put on too many positions here. As I took off a lot of positions yesterday into the strength, but I still have some stragglers on. And then what I want to do is I'm okay with letting this market come in a little bit, and and having some hedges on. I put on a Q's. I put on an S&P hedge I talked about yesterday, so I was able to take a target in that today with the intraday volatility. And I was kicking around some Q's puts today too. So don't be afraid to do that right now because the market is really juiced with that put call ratio indicating it is. Again, intraday you could do this, or you can have on a little bit of a hedge. But again, hedge is the key word for me. Everything is still in uptrends, so I'm not speculating to the downside. I'm just hedging my exposure a little bit in case we get a little bit more downside, right? That should help out some of my longs, because what will happen is if the market pulls back a little bit, my longs will hurt. But if I've got a hedge on, that buffers some of the loss from that. Q. So a couple of things that I was looking at on the 1 hour. Now we didn't even get down there, but I wouldn't be surprised if we come down and retest this 232. Right. Notice the price is now below the short-term moving averages. on the 1 hour. So 232, and I took off the Q's puts. I made a little bit of money in them. Let's see, where's my trades channel? Everybody, we've got a lot of conversations going on in here. But yeah, I traded a little bit of Q's puts, and a few of these at 310, target at 350. I took them off. And then I put some more on once I saw that, it looked like if we go to the Qs just for a second, because I know I'm spending a little time here because I know a lot of people are in technology and so forth, but you could see these big red bars. To me, it just shows that there was a seller today. And again, you should be thinking about that, right? After this big move in the Qs, who's going to be taking profits at this point, right? There's going to be, I think, some selling programs that go through from time to time. After this kind of a move, there's people who have been adding in here and in here and in here, like we have. They're going to take some money off the table here, right? And maybe wait for a pullback. And then I would imagine, again, I'm not making this prediction, but I do think if the market pulls back a little bit, like if the Qs go down a little bit more and technology gets sold more, it will bring out more buyers, in my opinion. As long as the Fed has the spigots turned on, in terms of they're continuing to add liquidity to the market, it's going to bring buyers out on dips, in my opinion. That's my guess. But 232, I would like to see actually the Qs. And again, if you've been trading for a while, you kind of want pullbacks because those are better places. There's better risk to reward to add on these pullbacks than chasing a grinding market. That's just how it works in trading. All right, so 232 and also, so that would be the first line of defense. Again, I'm just kind of planning things out to the downside, but notice we're not even down to the top of value either, which is also around 232. So you got top of value on both the daily and 1 hour. Because again, I think as the country reopens, there's going to be some profit taking in some of these areas that have worked really, really well while people have been working from home. People are still going to work from home, by the way, but it's not going to be, full out. All right. So what else to go over for the day? And again, just like I talked about with some of the trades that I'm like I said, I'm a trend trader, so things that are in downtrends, I can play for a short trade, but I'm either out of them in a day trade, or I am, out of them for a very short-term swing, and that's just how I play names that are in downtrends. I get out very quickly because ultimately a lot of these things go back and they sit back in downtrends. The one thing that I'm a little bit worried about is when I see things like this, like I hate to call them to use this phrase because some people really like these names, but I apologize to in advance to use this term, but they're kind of bottom of the barrel stocks. They're the most beaten up stocks. Usually, not always, but when we see these last things, these bottom of the barrel stocks rally, sometimes it kind of gives me a feeling that the rally is kind of getting on its last leg. Now, again, I will wait for the sell signals to kind of determine that. But when you see something like that, when all of these stocks that, let's face it, their business is not that great. They're underperforming for a reason. So when you see these last things tend to outperform, sometimes it gives me a feeling like this is the last leg of a rally in the short term, right? Until it kind of resets a little bit. So that's my feeling. That's something from experience. So I don't know that for sure. And again, that's just a little bit of my intuition. I will wait for some sell signals before I really that confirms my view. Now, again, I'm using my intuition and trying to really be smart with positioning, right? And I've been saying that now for the last couple weeks as we've been grinding higher, but making money all along the way. All right, so a couple other things, like so some names. I keep getting a lot of questions about some names that are reporting that go to report earnings, and you know, I'll just spend a quick minute here because I think most people are familiar with this. When a name runs into earnings like this, when they go to report earnings, now that they've had such a big move, they have to, in their earnings report, they have to justify this run up, which means they have to have a spectacular earnings report. Not just one that beats expectations a little bit. They have to really have a spectacular earnings report for them to rally further because the stock has already priced in a very good quarter by the move into earnings. I talk about this in a lot of videos, but I think it's being lost in the sauce because I'm getting a lot of traders they were asking me this week, hey, are you playing work? Are you playing Slack for earnings? No absolute way that I would play this name for earnings because it's already gone from $30 to 38, right? We talked about that in a bunch of other names, but I think Zoom is a good example, right? The quarter that Zoom turned in. Now Zoom had rallied crazy into this print, and I did put on a very nice earnings trade for this. I had put on an iron condor where I sold a call spread, sold a put spread. So I bought this trade back where I sold a call spread and sold the put spread for a combination of 80 cents for net price, and I sold the whole structure for 540. Right, so that worked really well, selling premium on earnings. That's a very good trade to do, in my opinion, on earnings. But if you look at Zoom's call, like they exceeded all expectations. Their numbers were fabulous. What did the name do on earnings? Basically has done nothing. It stayed where it is because it already ran, the move already happened, right? It already priced in a spectacular quarter. Now, if they didn't deliver or if they just met expectations, the stock would probably be down to like 175, right? So keep that in mind. It's the same thing. It's the same concept with MDB. MDB was down today, down 6%, but from where this was just a month ago, it was $160. What's the percentage change? So if you so I'm saying this concept over. I know I've said it in other videos, but I get the question a lot, and I don't really understand why traders are thinking that that it's going to go higher if they report good numbers. They have to blow out the numbers because the stock has gone up 40% in a month. What else are you looking for? So that's the whole trade. The trade is the move prior to earnings, and then you take the money and you put it in your pocket, and then you wait. And if the stock sells off a little bit after earnings on good numbers, then you can think about adding some of the position back. But you really have to frame this in terms of risk to reward. Meaning, and put it in terms of probability. What's the probability of a return after the stock has already gone up 40% in a month? The probability is not in your favor that the stock is going to go up another 20 or 30% because it's already gone up 40%. Do you understand what I'm hoping this concept resonates because I get the same question like a lot. I get a lot of people who are talking to me about CrowdStrike because I held this thing into earnings. Look at what it's done. Now it reported a fine quarter, but it's having a little bit difficulty up here because now it went up today because there was a hack today. So before that, the name was down I think around like 4%. But frame this in terms of risk reward. What is your reward potential after the stock has gone up like 60% in a month and a half? I mean, this is not a hard concept. But I'm just going over this because I'm getting so many questions about this. It's already moved decently. You got to look at another stock. Just the return is not in your favor. The probability of a return after already a 60 or 70% move is just not there to be putting on a lot of risk. So again, I had mentioned this in the trading room yesterday when someone asked me about what was the name yesterday. Somebody asked me about. I think it was this name as well as Slack as well. So you have to frame that, and that's why I played Zscaler, because Zscaler. Now, granted, it still moved decently from here, but at least it, in the prior couple weeks going into earnings, it did nothing, right? There was more of a chance that if they beat their numbers, that they were going to have an upside move, right? So again, if the name runs into earning, I will say it again for the last time. If a name runs into earnings like 30, 40, 50%, the numbers that they are going to have to release are going to have to be way above all expectations for them to go up further. Now, that's possible, but probable? Not. It's for a name to have much better than what all these analysts are pricing in, very difficult. And I think that is why you have Slack down after hours, because they put in an okay quarter. They're showing growth, but the street analysts were expecting a bigger number because they are a work from home stock, and they should have growth given that environment. Now, so their growth wasn't as good enough as what everybody was expecting. That's why they're down. All right. Now, full disclosure, I did buy some at 34 because I'm buying the dip. Now it's gone. So again, I didn't play this name. I haven't looked at it. I went into this week long Slack, and I was content with taking profits at, like, where did I take profits in this name? I didn't get the tippy top. I think I took it off on Monday. 36, right? You take that and you put it in your pocket, and then you wait for the dip, which is now back down to 34. And I'll probably add some at 32. Right? But that's trading, guys. You take some of the money that you earned looking for a run into earnings, you put it away, you put it in your pocket, you leave it until it dips again. As long as, because I think the numbers were fine, they just weren't blowout numbers. And they weren't as high as what the street was expecting. All right, guys, I've talked too long, but again, I hope it helps to kind of hash out some of this stuff, because I think too many traders, I think younger traders are expecting too much after you know big moves in the market. All right, guys, have a great night. See you tomorrow.